I just realized we weren't recording, so I'm going to start again. My apologies. Welcome to this members webinar for Ess Biztools. And today we're going to talk about developing 2020-21 strategic planning with your clients. I'm Peter Towers, Managing Director of Ess Biztools. If you have any questions, can you please ask me later on by typing your question into chat, or if you're watching this as a recording later on, send me an email, please, peter@essbiztools.com.au. And before we go any further, happy new financial year. After all the dramas of 2019-20, you're probably relaxing just a little bit at the start of the 2021 financial year. But unfortunately, or fortunately, whichever way you want to look at it, there are still a lot of challenges for you to be able to service your clients' requirements during this new financial year. And there's been a lot of extra work thrust onto accountants in the last 4.5 months. And hopefully we can give you some clarification on a very important issue today, and that's strategic planning. But first of all, let's just have a look at what's happened in recent days. Compliance expert provider of broader advice to clients. This was the theme of an article in the Financial Review on the 18th of June, which I think really set the scene for accountants this year. And the heading was, Accountants Become the Centrelink of Business World. If you missed it, 18th of June 2020, if you can't find the article, send me an email and we will send it to you. Accountants of the future will need to be a compliance expert who can grapple with fast changing rules. Well, you've certainly had a bit of that of late, haven't you? With all the changes that have occurred from the government on the JobKeeper program and various other programs that have been introduced. But then the article in the Financial Review went on to say, while providing broader advice to clients about their business. And this is the exciting part of this particular article, because it really identified that the marketplace now has a very strong expectation for accountants to be providing a broader range of services to your clients. And the article also indicates that savvy accountants have used this as an opportunity. I hope that includes your firm, to shift gears and provide clients with wide-ranging business advisory services to navigate the crisis. And we're going to explore one of those business advisory services in this webinar today. And the article continues, accountants need the ability to communicate because this is important as technical nous. You know the technical side of things. You might not fully understand some of the business models that your clients have and how they're operating their businesses. This is one of the challenges. Obviously, you know the taxation laws, but it's understanding some of these other items. The article also says it's well and good to understand your clients' books, but you also have to be able to understand what drives your clients. And what better way to help find out what drives your clients than to assist them in the preparation of a strategic plan, which is obviously what we're going to be talking about today. Because you need to be able to guide them as a chief financial officer role through the challenges of running a business. And there's been plenty of them in the last 4.5 months, and there is still plenty of those challenges to come. And good accountants often become a confidant to their clients. And this is important also. as you work through with them in a far broader role than just supplying taxation. And then a couple of days ago, we had the latest report from the Commonwealth Bank Accounting Market Pulse. And the key area that I want to bring to your attention is practice areas expected to be in most demand, was the heading on page 11 of that report. And the question that was asked of the accounting firms, large, medium-sized and small, that were involved in this particular survey. And this is about the 6th year of this survey. I think it's got credibility in the marketplace. Which services do you anticipate will be in highest demand in the next 6 to 12 months? Now, if you haven't seen this result of this report, why don't you write it down now? We'll just stop for a short while, not very long. What do you think the highest demand area for your services will be in the next 6 to 12 months? And then I'll tell you what your peers selected. And I hope you selected it. Business advisory services has been nominated by the firms that were interviewed by the consultants engaged by the Commonwealth Bank, and they gave it a rating of 70%. The next closest was business recovery and insolvency, 61%. Now, insolvency obviously is a specialist area that if you undertake insolvency work, you'll be gearing up for it, unfortunately, in October, November. But business recovery is something you could be looking with your clients now. Many businesses can still be helped, but they need very proactive accounting services to help them. The key to commencing business advisory services, I think, especially in this environment we're in, is the key subject we're going to discuss today: strategic plans. Where do you start? I think you start by having a business review meeting with your client's leadership team. I like to make it a little bit broader than just your client or the CEO of your client's organization, because your clients should be encouraged also to clearly understand who their leadership team are and to consult with them and bring them into this decision-making process. And I think you should be sitting there in that room with the checklist of items to be reviewed. And we're going to cover, I hope, all of them today. So the first question is, where are they at present? They've been through the COVID-19 dramas. Are they only surviving because they are on JobKeeper, or have they been able to avoid JobKeeper? Where are they at present? Are they in good shape physically, mentally? Where's their team? Have their team just taken the $1,500 per fortnight from JobKeeper and not available for work? I've heard some horror stories relating to that, which I find very disturbing. So where are they at present? Let's go through some of the issues. Customers, what's happening with their customers? What's their level of customer service? Have they had feedback from customers? So what's going to be their strategy for customers going forward? Have they made contact with them? What's happening with suppliers? Where are their suppliers located? Are they heavily dominated to one particular country or even region? Is that healthy in what we've learned since around February this year? Are they talking to their suppliers? Are they gearing up to continue with their supply of products, or are they wanting to do something different? What about the team? Has the team been spending this period of work disruption, working from home or whatever, in meaningful work, or have they been doing training, or have they just been having a rest? And how quickly can that team be remotivated, rejuvenated to undertake their tasks? Does the business need to change anything with their premises? What have they learned from the lockdown period? Have they got a significant number of team members who now want to work from home on an ongoing basis? But even without those questions, are the premises going to be suitable for the business's expected turnover and other activities during 2020-21, or is there some refreshing required, coat of paint, some new fixtures, fittings, or even some new premises somewhere else? Technology and machinery. Technology never stops, does it? And does your client need to take advantage of a new software product or a new type of machinery that's available to assist them to undertake their work? What's it going to cost? What's the delivery time? What's the payback or return on investment from that particular investment? Has the business been undertaking research and development? I suspect there's been a fair bit of research and development conducted during this layoff period. Who conducted it? Was it undertaken by an employee on behalf of the business, or was it the employee doing it for their own benefit? If it's been undertaken for the benefit of the business, is it worthwhile pursuing? And if so, is the business a company? Because to obtain the research and development rebate, you have to be a company. And is more than $20,000 going to be spent on that activity of research and development? It doesn't have to be in one project, it can be on a dozen projects, but the accumulated expenditure has to exceed $20,000 in a 12-month period. Have you briefed your client on the requirements for the maintenance of records, going way back to the very beginning of an R&D project, identifying what it is, determining what sort of research needs to be undertaken, determining the hypothesis for various projects, and then undertaking experiments to prove or disprove the hypothesis. Then the recording of the expenditure, because the guidelines for research and development tax rebates are fairly tough, and most clients are going to need your assistance. And it's best to do this right from the start. We're at the start of a new financial year. So if clients have identified that part of their strategic plan is to undertake research and development, please get them set up properly now. Development of products and services that may have had R&D undertaken last year or a couple of years ago, getting them ready to be introduced into the market. What's got to be done? Who's going to handle this? What sort of promotions have to be implemented? These are all the sorts of questions that I think you should be asking as part of this process of developing strategic plans for the business. Let's look at one of the big problem areas for many businesses: debtors management. Is there an appropriate system? Is there a follow through to make sure that the customer, the new customer, has signed terms of trade and retention of title agreements so that your client could register that customer on the personal property securities register if your client elects to do so? And as you know, there is a short window of opportunity available to undertake that registration process, 20 days. So they need to get the signed documents returned from their new customer very quickly. What's their debtors days outstanding? What can be done to reduce debtors days outstanding? When are they sending the tax invoice to the clients? How are they sending them? By email or by normal mail delivery, which is getting slower and slower. Australia Post only making deliveries every second day, and in some cases only once a week. And if they're still producing debtors' statements, are they being dispatched by email promptly? And is all the information that the client wants attached to the tax invoice? Because if they don't get what they want, they won't pay for it. And that blows out debtors' days outstanding. How's your client going on abiding by their creditors' terms of payment? If their major suppliers have indicated they want accounts paid in 30 days, and currently that account is sitting at 46 days, what's going to be done about it? Because your client runs the real risk that that supplier could turn off the supply. Is there an alternative supplier, or is your client in a very difficult position? What about inventory if your client carries stock? What's the investment? What was the budgeted investment? What's going to be the investment in 2020-21? What are the expectations of what's going to happen this year? And therefore, how much build-up does there need to be in inventory? What are the stock turn rates? Is someone looking at them every week or month and analysing them and making decisions as to sales or other promotions that might be introduced? If your client's a retailer, are they preparing a budget which is just slotting in a figure, $4 million, without much thought as to the sales mix that's occurring in the business? Because your clients will have all sorts of variable markup rates. And obviously, if they sell a lot more of product A where the markup's only 50%, as compared to product D where the markup's 200%, they're going to have a significant change in the profit. And it could even be a loss for the end of the year. So have you undertaken a retail pricing review? And within Ess Biztools, you've got a product package that can assist you to do that, the retail pricing product package. If your client's a tradie type business or a manufacturing business, we have a charge out rate calculator, which is going to look at the work hours of the employees, their productivity that you have budgeted, but is it being achieved? The materials markup that's being used, the overhead expenses in the business. And when all that is factored together, how are they going on their targeted profit? Now, I think you should be undertaking these tasks, the retail pricing checklist and the charge out rate checklist, prior to calculating the final budget. You'll need the overhead budget, and you'll need some determination as to what the team's going to look like. But it's very important to make sure that you're going to be able to monitor and control the flow of information as to how the business is going month by month in trying to achieve its overall profitability result. And this can help you do that. Arrangements with banks or financiers, what are they? Is anything arranged, or are we just hoping for what the outcomes might be? I suspect there's going to be great difficulty in trying to borrow from banks from October onwards. Banks are warning that they've outlaid a lot of money. They've got a lot of money at risk because they've allowed deferment of payments for 6 months or so. And in fact, yesterday they announced that they're going to entertain the idea of having discussions with clients on an individual basis if they want to extend their deferment of loan repayments for another 4 months after the 30th of September. Has your client been able to make appropriate arrangements with their banks? Or is there some other funding requirements that are going to be needed to help your client succeed? What's the vision for the business? Hopefully this exercise is going to get them excited if they've been a bit asleep. Wake them up. Get them excited about where this business is likely to go so that they can clearly define their vision and be able to articulate to you what they want their business to look like in 3 years or even 5 years. What's the leadership team got in mind? What are they trying to achieve? And where can you help them? So the planning process then takes over, and I think the detailed document is the business plan. That can be summarized on individual business units. And then the budgets and cash flow forecasts need to be prepared, preferably a 3-year period, looking into the future. Predictive accounting is what my colleague Paul Berner, who's the representative for Plan Guru in Australia, calls it. Predictive accounting. What's the budgets and cash flow forecasts, and what's the business going to look like? Because predictive accounting, which is the 3-way forecast, includes a predicted balance sheet showing you what your client's going to look like in 3 or 5 years' time. Now, is this all highlighting there's going to be a funding shortage? The client wants to do special research and development, which has been estimated to cost a few $100,000. The client wants to upgrade their business premises, cost estimate $500,000. They might want to open a new store somewhere or embark on something else. Where's that money going to come from? So let's look at the funding opportunities that you might consider as part of the strategic plan when you're sitting there with the leadership team. Always an interesting question when we get to this. I look around the table and look at the owner or the shareholders in the eye and say, were you going to be able to put some money into the business? Unfortunately, at times I get a response, oh, geez, we wanted to get high dividends this year. I want to buy a new boat or a new car, big one. So have the owners and shareholders got any ability to contribute the shortfall in funding? And then you could turn to their friends and say, ask them if they got any friends. They mightn't have any left, of course. But are they prepared to lend them or in money or invest in the business? And are they happy to go to the bank or other financial institution and try and borrow money? I think your opportunity to do that is between now and the 30th of September. It's not that far away to see whether the client is able to borrow money. And perhaps at this stage, they could enter into one of the federal government sponsored loans. The government's guaranteeing 50% of the debt, the coronavirus SME guarantee loan. That's a loan of a maximum of $250,000 to be repaid in 3 years. It's supposed to be at a low interest rate. I understand one bank's got the interest rate at 4.5% and is asking for personal guarantees. Perhaps Section 708 capital raising. A reminder that your client, if they're a company, can raise up to $2 million in 12 months, but from a maximum of 20 shareholders. And you have to be careful on the shareholders. If obviously they're a private company, just make sure you're not going to go over to the 50 shareholder limit. Early stage innovation company capital raising. This is a specialist area because it only applies to young companies under 3 years of age, income under $200,000 in the last 12 months, expenditure under $1 million in the last 12 months. A company that has invented a new product, process, service, marketing, or organizational technology that needs some money. Established companies probably won't be in that category. Or it could be crowdsourced funding, equity raising. The ability to raise $5 million over a 12-month period from the public. Maximum investment by a retail investor, $10,000. No limit on a sophisticated investor. And the Australian Business Growth Fund that the federal government had proposed would be operational by 30th of June this year, that we haven't heard much about at all for the last 4 or 5 months. This is a fund that basically is going to be looking at investing sums of money into companies. Most companies that want to avail themselves of this process, though, will probably have already been through crowdsourced funding, equity raising. And government grants obviously come into the funding equation. And the grant that I've got in mind in particular is accelerating commercialisation. If your client has been involved in the development of new ideas, new technology, that grant's of a maximum of $1 million, but it requires matching funds of up to $1 million. But it's available and is strongly supported in the marketplace. What's going to be your ongoing involvement for these ideas for the development of strategies for your clients? My suggestion is you say to your client that you strongly recommend that there should be a monthly business review meeting. It's not a taxation review. You're going to have one review a year relating to taxation, I think. But let's concentrate on commercial issues for your clients, going through the list that I've just gone through with you. What are the issues? Because this is what you would be doing if you were the employed chief financial officer within those businesses. That role that is not narrowly there just on annual accounts and an income tax return. I know it. I performed it at one stage in my career. I was the company secretary and chief financial officer of a listed public company. There was a lot of other issues besides taxation, I can assure you. A lot to do with day-to-day management. What if questions from the CEO and other members of the leadership team. I think it's essential that you make sure that there are monthly financial accounts being prepared for every business unit, not putting it all together in one profit and loss account. Now, when you finalise the accounts at the end of the year, and for the information that's available in the taxation return, if you want to have the consolidated accounts, then by all means. But management needs individual financial accounts for the individual activity so that the person who's got control of that particular activity has got his or her figures. They can see what's going on under their stewardship. Very, very important. And the strategic plan should be highlighting this. And what goes with the financial accounts on individual unit basis is key performance indicators. And please have a conversation with the people who receive these key performance indicators, and then make sure that everyone who should get them is getting them. And I believe everyone who receives them should be anyone who's involved in leadership or management roles in any of those business units. And then talk to your client about conducting some training programs with those people. so that they clearly understand what these figures mean and how they can help them undertake their job. Because I found over the years when I talked to line managers in businesses, including the business that I was the chief financial officer for, that people down the line don't understand what all this is about. They can't read the P&L accounts, even when you prepare them on an individual business unit basis. So they need some mentoring and training because they're responsible. They're the manager of that role. I suggested as part of your role to make sure that they can read this material and understand it. They just don't put it in the bottom drawer in the envelope that it was sent to them. And when you ask to have a discussion with them, they pull it out and unstick the envelope. They've never read it because they don't understand it. Could be argued it's been a complete waste of time in preparing that information. But you can rectify that as part of the strategic plan by saying, we need to have some training exercises and keep them up every 3 or 4 months during the year because people change. People go on holiday. Someone else has got the responsibility. And I think part of the strategic plan should be that you should be saying to your business clients that you want to deliver a chief financial officer service to their clients. Now, I'm not suggesting that every client is going to want you to do this, but from the various reports that have been produced, I suggest that a significant number will want you to undertake this broader range of service delivery, the Chief Financial Officer services. And one of the key roles in that function is not sitting there all day producing financial reports. In my own personal experience, I found that a significant amount of time each day when you were there on a full-time basis was the what-if questions. The bright idea the CEO got at 3 a.m. in the morning. And sometimes he didn't just write them down. He'd ring me and say, what do you think of this, Pete? Will this work? And other members of the leadership team have their own questions. And it might be a check on a legal situation. It might be a check on currency. It might be a check on a costing exercise. If we varied what we were doing in production, how much more money do we need to get for that product to equalize what we're currently doing? What if questions. I think you should be encouraging your client to ask them and factoring that time into your overall proposal. So this is an ongoing activity. It's not a great rush now in July to prepare strategic plans and then forget about them. They need to be developed and then looked at on an ongoing basis, daily in some instances, most definitely weekly. What was our weekly result as compared to what we planned? And most definitely monthly. Not 3 monthly, not 6 monthly. Try and get your clients to sign up for a monthly review. Now, you might have to reorganize some of the work within your firm. There may be some of those very small business clients that you're only going to see for a very short amount of time, or maybe not at all, because you've delegated that work to someone else in your team, in your firm, so that you can concentrate on these business issues to assist your clients. If you've got any questions, and I don't see that any have come through to me here today yet. If you've got any questions, how about you send me an email, peter@essbiztools.com.au, and I will get back to you. Hopefully I've given you food for thought on what's involved in developing strategic plans for your clients. If you haven't already prepared strategic plans for this new fiscal year, why not start doing it tomorrow? Contact your key clients, have those conversations with them. That's far more important than preparing tax returns at this time of the year. Delegate that tax return work if you're committed to doing it. But this is the opportunity to really identify to your clients that you can attend to additional services, services which will add value to your client's business. Thanks for your support of Ess Biztools and Ess Bizgrants by being subscribers to our products and services. If you have any questions on any aspect of what we produce and how you can use it in your firm, if you're looking for some extra mentoring services, we are able to supply those. If you need a refresher webinar, please contact us and we will see what we can do. So thank you. Stay safe and have a great day. Goodbye until we talk again in a couple of weeks' time in our next members webinar. Bye-bye.